Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 30th of April 2022 and we're publishing our gold and silver weekly update for the week ending the 29th of April. Last week's update had the headline, Expecting Lower Prices Before May the 5th, and this is exactly what has happened. The question is, can we now expect a rebound, or will prices go down even further? Well, let's take a look. Now, before we look at prices, a quick shout out to our Thursday's video entitled Gold and Silver Fall as Dollar Index Soars, where we had pointed out that the dollar index even surpassed our estimate at over 103, and that Friday will be an interesting day for prices because of inflation or PCE figures due out. Well, we've put a link to that video below. If you get a chance to listen to it, then please do so. Now we shall take a look at what has actually happened, but first the financials. Gold fell $35 last week, falling from $1,932 to $1,897. This is almost an $80 fall in 2 weeks. It hit a high of 1935 and a low of 1873, a fall of 1.8%. In sterling terms, though, gold finished the week at £1,508. That's actually up £2. And in euros, it closed at 1,798 euros. That's up €9. And simply shows how strong the dollar has performed this past week, and also how weak sterling and particularly the euro has been in comparison. Silver fell $1.40, falling from $24.17 to $22.77, having hit a high of $24.19 and a low of $22.71, a fall of nearly 6%, and is down now $2.90 in just 2 weeks. In sterling terms, silver closed at £18.12, that's down 72 pence, or almost 3/4 of a pound. And in euros, it closed at 21.59 euros, that's down 0.80 euros. Now, of course, with such movements, the gold to silver ratio went up from 79.9 to 1 to 83.3 to 1, the highest it's been for some months. Bitcoin has fallen $1,105 and currently stands at $38,519. Part of the reason, of course, is because what's been happening to the equity markets and particularly the Nasdaq. Now, looking at equities, the Dow Jones closed on Friday at 32,977, down 939 points on the day and down 834 on the week. The S&P 500 closed at 4,131, down 155 points on the day and down 140 points on the week. And the Nasdaq Composite closed at 12,334, that's down 536 points on the day and down 505 points on the week. So had Friday been neutral, equities would have been marginally up, but nothing exciting to talk about. Oils, well, Brent crude closed at $107.14, that's up 49 cents, and WTI crude closed at $104.69, that's up $2.62 on the week. The big news for the week, though, is that the dollar index stands at 103.21, that's up 1.99, almost 2 points on the week, and had been even higher earlier that week. Now, we concluded last week's video with the following forecast. Quote, we expect to see gold trading between 1880 and 1980, with 1850 to 2010 as outliers, and we see silver trading between 2350 and 25, and 23 to 2550 as outliers, though we pointed out we were expecting lower prices and therefore expected precious metals to trade within the lower band rather than the higher band. Well, gold opened down and continued to fall really until Friday, then surged to nearly $50, only to fall back again by 22 towards the close. Gold traded within our normal range prediction for most of the week, save $7 when it momentarily fell below the low end of our prediction, but still traded well within our outlier range. Silver, like gold, fell immediately, and in spite of a few small rallies, particularly on Friday, still managed to maintain its downward trend. Now, while silver traded within our normal and then outlier range to the lower side for most of the week, the last few hours of trading, it dipped even lower than we anticipated by 23 cents, closing though just 6 cents above its week's low, so hardly inspiring for next week. The difference between gold's high and low was $62, or 3.2%, while silver's difference was $1.48, or 6%. Now, of course, the rapid rise of the dollar index to 103.5 at one point, as we pointed out in Thursday's video, provided severe headwinds for precious metals, though the prospect of nuclear war, hinted by President Putin, certainly prevented prices from falling further. Let's now take a quick look at the economic data announced last week, and especially inflation, or PCE, and then look at what is coming up this week, with the FOMC announcement on Wednesday the 4th, which will be so crucially important. So let's take a look at this economic calendar for the past week and what's likely to happen this coming week, or what at least is going to be reported this coming week, and the repercussions thereof. On Monday, nothing scheduled. Tuesday, we can see durable goods orders as per expectations. We can also see consumer confidence index on Tuesday actually down for April compared to both what was reported in March and against expectations of something slightly higher. And new home sales were also lower than anticipated, so not really very positive news there. Then when we look at pending home sales, we can see it's down 1.2%, which, although in negative territory, is better than anticipated. And the rental vacancy rate for Q1 is higher than it was in the previous quarter. Now, initial jobless claims came in exactly as anticipated, slightly down from the previous week, and the continuing jobless claims broadly unchanged. We can see that real gross domestic product, and this is the first estimate, so it will be revised, is minus 1.4% for Q1, against an expected positive 1%. Now, the important data Friday. PCE price index, 0.9. This is for March, compared with 0.5 for February. That's a rise of 0.4%. The core PCE price index, though, was slightly down and as per expectations. So year over year, we have PCE at 6.6 and core PCE at 5.2. Not great figures, but slightly better, shall we say, than anticipated, but only slightly. Nominal personal income is up 0.1% as per expectations, but down compared to February. Nominal consumer spending, though, is up at 1.1%, but real disposable incomes, surprise, surprise, is down 0.4%. Real consumer spending is up 0.2%. Then, perhaps less important overall, the Chicago PMI has come in lower than anticipated, and the UMich Consumer Sentiment Index broadly in line with expectations. Now, this coming week is more important. We have, on Monday, the US Manufacturing Final PMI and the ISM Manufacturing Index for April, and construction spending for March. Tuesday, we have job openings, quits, factory orders, and motor vehicle sales. Now, the important ones from our point of view, we have the ADP employment report, which will give us an indication, not a guarantee, but an indication as to what's likely to happen on Friday with the non-farm payrolls, and also potentially give us an indication as to what's going to be announced, if this report comes out first, later on by the Federal Reserve, which is the key piece of information coming out on Wednesday. And we have the ISM Services Index. So we have Fed Chair Jerome Powell making his announcement and then speaking to journalists afterwards. And frankly, we're going to expect to see some significant movement in the price of gold and silver just prior to this announcement or immediately after, which is why we've broadly said Thursday the 5th of May will perhaps see most movement, if only because it will give analysts and traders enough time to absorb what is actually said by the Federal Reserve. On Thursday, we have the initial jobless claims as always, productivity and unit labour costs, and then the very important non-farm payrolls on Friday. But to be candid with you, whatever these come out at, they will have a bearing, but you can rest assured that the FOMC will be broadly aware of these figures that are due to be announced. So whatever they factor in terms of higher or lower rates, and we all know they're going to go up, the question is, will they rise by 0.25% or 0.5%? But the farm payrolls will then justify that accordingly. And we're still expecting those figures to be quite strong, although maybe not as strong as they've been in recent months. And then we have consumer credit for March. So this is the comprehensive data we've got coming out this coming week. Okay, so going back to gold and silver, how do they look from a technical point of view? Well, gold has resistance at the 20-day moving average of $1,936 and support at the 200-day moving average of $1,833. However, with the 20-day moving average crossing below the 50-day moving average and the MACD printing a negative trajectory from a technical analysis point of view, we should expect to see lower prices again next week. Silver has strong support at $22, and the 200-week EMA lies just beneath that, which further provides some comfort. However, if this level is breached to the downside, and it could be, especially if the Fed is very hawkish, then we can see silver dipping well into the $21 territory, and ultimately aiming for $20, though we don't expect it to go quite that low, not quite yet. Resistance is seen at 23.81, where the 200-day moving average lies, and the fast stochastic and MACD also point to lower prices. So what's our prediction for this coming week? Well, unless the Fed surprises us and raises rates by just 0.25% and acts dovish, we still expect to see lower precious metal prices, but if that happens, it could give them a bit of a fillip. However, we don't expect that to happen. We expect a 0.5% rise in rates and the Fed to act hawkishly. Now, of course, that said, if the situation between Ukraine and Russia, and then Russia and NATO, heats up further with additional military action, and we're seeing the deployment of troops now, then this may dominate and act as a floor, and could even potentially push prices higher. However, with that caveat aside, we're expecting lower prices this week. So, we're anticipating that gold is going to trade broadly within $1,825 and $1,950, with $1,800 really being the floor and $1,975 as an outlier that we're not really expecting gold to rise to. We see silver trading between $22 and $23.75, and to the downside ultimately as an outlier $21.50 and $24.50 to the upside, but again we're expecting them to trade towards the lower end. But that said, we could very well see some price swings during the course of the week as the various forms of economic data is announced. What do you think? Do share your thoughts. Our video is a little longer this week than normal, but there's a lot going on this coming week. Please share your thoughts. Thank you for listening. If you haven't done so, do subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Tomorrow we will provide a repeat of this video but under a different thumbnail and header, and we wish you an enjoyable, safe weekend, bank holiday for many of us in the UK, and of course, as always, a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.